AmanahRaya's REIT business is poised for a boost with the entrance of a new Japanese investor. However, what does this mean for the future investment profile for the trustee service provider? I speak to its GMD, Adenan Yusof, about his plan with the new investor in town. Hi, Cik Adenan. Thank you so much for joining me in this episode of Talking Age. Now, you were appointed as AmanahRaya's Group Managing Director in September last year. Yeah. What is the strategy that we have laid down for the company in 2017?
Okay, we have a lot of things coming up this year. Our plan is basically to put our house in order. That's the main priority that we wanted to do. We are a service industry. In the service industry, you know, we've got to improve our services and so on. So our main focus will be basically our human capital. Right. You know, we've got to develop a good human capital base, you know, in order to provide a good service to our customers. As you know, our core business is in providing trusteeship, providing managing trust funds, you know, and doing wills, basically wills writing and so on. The strength of AmanahRaya, you know, people out there, you know, they sometimes, you know, doesn't know, you know, what is actually AmanahRaya and so on. These are the things that we've got to emphasize next year. We've got to make sure that people know who is AmanahRaya, what we are doing and so on. Those are the focus that I wanted to do for AmanahRaya. Yeah.
Now let's look at AmanahRaya's REITs, of which you were previously the head of the company.
Yes.
Now, AmanahRaya's REIT were bringing Japanese investors to come and invest in the company. Yeah. Now, what synergy will they be bringing, and why was the reason to pursue such transactions?
Okay. Canadix is a major asset management company in Japan. You know, they are now managing an asset totaling about 60 billion in terms of Malaysian ringgit. So they are huge, they are big, and they are very experienced. That's the thing. We want to leverage on their expertise. We want to leverage on their strength. At the same time, here at AmanahRaya's REIT, you know, we need a partner that can basically that we can work together in order to strengthen AmanahRaya's REIT, in order to expand the portfolio. And that's the reason why we entered into agreement with Canadix, you know, to provide us with that strength and synergy to improve our REIT. You know.
Right now, as for the REIT business, what is the plan to? I mean, is there any plan to acquire any more assets this year? You know, what do you look at?
Of course. You know, I mean, size is very important when it comes to REIT. Actually, a good size for the REIT. This is my personal opinion. Is somewhere around $1 billion. You know, in Malaysian ringgit, it's about 4 billion. You know, minimum I would say, you know, for the REIT to have a good for a good size of a REIT is somewhere around 3 billion Malaysian ringgit. The reason why we need a good size is that we need. I mean, at the moment when you look at the liquidity of the market, of the REIT market, it's very low. You know, you don't have that liquidity actually in the market. So size would play an important role to improve the liquidity. People like big funds, you know, foreign investors and so on. When they want to invest in REIT, they also would like to look at the volume, at the liquidity, so that they can come in and out easily. You know?
Right. Now, but yield for the REITs in Malaysia, are they still attractive?
Oh yes. You know, if you look at Singapore, if you were to compare Malaysia with Singapore, for that matter, you know, we are now generating a yield of about, on average, about 6%. Singapore, on average, now is about 2 to 3%. You know. Japan, for that matter, is also the same thing. You know? So, in terms of yield, Malaysia is very attractive. You know? And looking at the value of our properties is much lower than what it is in Singapore. This is something that we have to work with Canadix. You know, now that they are as part of the manager of our REIT. Moving forward, we would like to discuss with them as to what will be our strategy in terms of the portfolio, in terms of the return that we are looking at, and so on. This is something that we are working on. This is something that we would like to address immediately. I believe this year, beginning of the first quarter, we will have something to tell the public about our strategy. Yeah?
As for the rental income of the property investments, are you expecting them to stabilize in this year?
Okay. This is a good question actually. As you know, the property market in Malaysia is softening, but I would say it's not going to be that bad. You know, as you know, the economy is still growing. You know, in terms of GDP for this year is about 4 to 5%. So the economy is still growing. I'm not expecting the property market to fall drastically. You know, probably somewhere about 5 to 10%, that kind of thing. You know? Right. But at the end, overall is stable. You know, overall is stable. Yes, there are oversupplies in some sectors. But overall is quite stable.
You also have a subsidiary called AmanahRayas Investment Management, which is involved in the investment, in providing investment services. Now, as the CEO of AmanahRayas, what do you think of the capital market in this year?
Tough. I would say. You know, at the moment, if you look at our investment, if you look at our portfolio. We are managing a fund of a size of about close to 6 billion now, and we are giving a return of somewhere between 5% on average. You know, 5 to 6% on average. You know, moving forward, it will be much tougher for us to give that kind of return. You know, because of the volatility of the market, the ringgit weakening. You know.
Right. Okay. My last question to you is: what is your general overview or outlook for the company going forward?
It's going to be very bright. You know, AmanahRayas has got a potential to go further. You know, especially as regards to managing estates. You know, providing will services, trusteeship. We have a plan, a strategic plan for the next 5 years. We are more focused. In the next 5 years, we are more focused. We are projecting a profit of about 30% better than what we have been projecting in the next 5 years. The growth drivers are basically purely in terms of numbers and so on. We are looking at improving our service. When we improve our service, our efficiency and so on, our costs will come down. That will then translate into a better profit.